All right, what's up, everybody? It's your boy Eon here, back on the ones and twos. As you can see, I'm back in Georgia. Um, Actually, if you didn't watch any of the earlier videos, you wouldn't know that I'm back in Georgia. So you probably think I'm still in Toronto. But this is the office. This is where I'm at. Gonna be making a majority of the videos. Might get a green screen. I thought this thing would like capture green screen, even though it was gray. But anyways, I digress. So yeah, so today I'm gonna go over some trades I placed. Well, not really the trades, but I guess the reason why my sentiment on the indices was bearish this week. It had mostly to do with interest rates. As you know, I trade gold macro thanks to my brother, my mentor, my sensei, Gio. Thank you, Gio. And yeah, so let's just jump right into it. So bang. Let's see this thing. Yep. Cool. So what I did this week was I was bearish the indices. And as you guys know, or majority of you guys know, I trade supply and demand with moving averages. And I do a whole bunch of other stuff as well, but we're just gonna stick with supply and demand for this example. So we started out the week down here somewhere. I think it was the 30th. Yeah. So we started out down here somewhere, and I was bearish the market. And I said here in this tweet, this was February 2nd at 3:53. I mostly sat on my hands this week, waiting for price to arrive to my short levels. Thought today would be the day, maybe Thursday or Friday. Oh, and let me also bring up the reason why I was expecting Wednesday to be the day for shorts. So we had this come out early in the morning. I didn't really think that would be the thing to push price lower. The main thing I was looking for to push price lower was non-farm payrolls. So I had this level here, and I also had this one here that I ended up taking out. I really felt confident about this one. I didn't feel too confident about this level here of supply, just because price already, it just barely touched it once. And if you actually look at the whole level is actually like that. So it already came into this zone once. So I didn't really see this as being super strong supply. So we'll take that one off. I had this level of supply here and this up here. And as I said, it was on Wednesday. I wanted to get into this trade before Friday. I'm still have some positions running on this trade. Let me make sure this thing is still. Yeah, I made this video like 2 or 3 times, guys. I'm sorry. So I'm just making sure that it's recording and everything. So let me go to the reason why I wanted to go short on this indices. So as you can see, this is January 26, 2022. January 26, 2022 is right over here. Had that huge move to the downside. I also caught that, but that's not what this video is about. So yeah. So let's look at this. Fed likely to hike rates in March as Powell vows sustained inflation fight. Yeah. So let's check out the video and see what he had to say. I don't know why.
In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer run goal, the economy no longer needs sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate. I would say this, the balance sheet is.
So that means money printer no longer goes burr. It goes something else but burr. So basically that means they're going to stop purchasing bonds, and in return that means that investors such as myself and such as you will not want to be heavily invested in risk on assets because debt will no longer be as cheap. It doesn't mean that the stock market is going to crash. It just means that a majority of people are going to more so go to cash instead of investing heavily into speculative investments, such as crypto, tech startups that are not profitable, pretty much any company that's publicly traded that isn't profitable. If you looked at the Russell, for most of 2021, it just went sideways. So you can already kind of see that they were already struggling, or at least the mid cap and small cap companies. And that doesn't mean that they're as a whole were struggling. It just means that they weren't seeing any new highs. But anyways, I digress. I do not want to go into all that stuff. Let's finish the video.
Much bigger. It has a shorter duration than the last time. And the economy is much stronger and inflation is much higher. So, and I think that leads you to, and I've said this, being willing to move sooner than we did in the last time, and also perhaps faster. But beyond that, it's really not appropriate for me to speculate exactly what that would be. We haven't gotten to that point yet. We haven't made it.
Oh darn. Anyways, I think they're only gonna go up to 25 basis points. Oh, it looks like it's gonna come back up. They're not gonna do anything crazy when it comes to how aggressively they're gonna raise interest rates. It's not like we're gonna see interest rates grow from like we're basically at zero now. It's not like we're gonna go to 0 to 5% in not inflation rates, but interest rates. It's not like we're gonna go from 0 to 5 by March. So it's good. I think they're planning on doing 3, and I don't think they're gonna be super aggressive. So that's not gonna make it to where people are trying to pull their money out like super aggressively to go just straight to cash and bonds. Some more of the video downloaded, so we'll go into that.
Decision yet, and we'll make that decision at the March meeting. We'll make a decision whether to raise the federal funds rate. I would say that the committee is of a mind to raise the federal funds rate at the March meeting, assuming that conditions are appropriate for doing so.
Also, let's look at it like this. Because they're planning on raising rates in March, it doesn't mean that the market is going to crash in March. A majority of the times when these type of things are scheduled to happen, a lot of the time it's already priced in by the time that the actual event happens. So that doesn't mean in March you need to sell your portfolio. That's not what I'm saying. You always want to have some risk on the table. You always want to, if you had a long-term bias or a long-term view on a stock or equity or a company, all the same thing, all three are the same thing, you don't want to just sell everything. It just means that you're going to see a lot more volatility in bonds and Forex instead of equities. So you're not going to see consistent new highs every single week. To me, the type of market we're going to see in 2022 is going to be the type of market that we saw in 2015, 2016. I'll show you guys that as well. Actually, let me show you that now while it's still on my mind. So, hang on, let me make sure. Yeah, so we got everything. So we'll leave this and we'll go to S&P. We'll just do a weekly chart. So we'll go to 2015, 2016. So as you can see, 2014 was good, 2013 was good, but 2015, 2016, I remember 2015, 2016, it was interesting because we opened and closed pretty much at the same price. So we'll just have to go to January 5th. Really, it's somewhere like around here. So we'll just say right there. We opened here and we almost closed here at the same exact price, as you can see. So 2015, let me get here we go. So bam, and then we'll just go here. So the 28th, 29th to the 28th. So as you can see this year, it was just choppy. Like it was a struggle. Now, the thing with 2015, oh, hang on, let me make sure. Yeah. Like I said, guys, I made this video so many times and it was just on me and not the actual charts. So, yeah, so we opened here in 2015 and we closed here in 2015. But the thing that was beautiful about 2015 is if you look at the currency markets, 2015 was a pretty interesting year for, man, I just had a brain fart. 2015 was great for Forex. As you can see, the New Zealand dollar went crazy. If you look at anything in 2015, there was a decent amount of volatility in forex markets. So 2015, bam, bam, bam. I mean, it was decent shorts most of 2015 on the pound dollar. The pound yen had some decent moves to the upside. I mean, really, when you look at forex, the times when investors aren't in equities, you're going to see the most, like a lot of the forex markets getting really active. And these are usually going to be the times when you're seeing a lot of interest rates being raised. So instead of trading equities, we can do carry trades and forex. So that's pretty much what I'm planning for this year. It's mostly trading a lot of forex, still trading some futures and commodities. But I want to go back to the trade. Oh, let's go back to the video and see what he had to say.
We have our eyes on the risks, particularly around the world, but we do expect some softening in the economy from Omicron, but we think that should be temporary, and we think that the underlying strength of the economy should show through fairly quickly after that. So there's a substantial amount of shrinkage in the balance sheet to be done. That's going to take some time. We want that process to be orderly. We're going to have.
Yeah, I don't know what's going on. But, anyways, the view from the Fed deciding to hike rates in March is the reason why I wanted to go short on the Nasdaq. So, as you can see, we had the supply zone. I'm gonna go to a 5-minute chart. That's where I decided to take the entries. And here we came into the zone. We broke the 200 period moving average. If you don't understand the 200 period moving average and the reason why I use it, if you check out how to trade as a merchant, I forgot what YouTube video I made, but it was something about merchant. I'll put the link down in the description. If you look at that video, you'll understand why I use this 200 period moving average to tell me what investors or what traders are looking for to buy and what they're looking to sell. And as a merchant or a businessman or a trader, an investor, a tradesman, anything like that, I want to buy things and I want to sell it for a better price, or I want to borrow things and then I want to sell it at a low. I'm trying to figure out how I can put it. I'm trying to figure out how I can put the idea of short selling, like a security or a contract or something like that. But basically, I want to know what people are trying to do. So if people are selling, I want to sell. If people are buying, I want to buy. So, anyways, that might sound so dumb, but anyways. I was looking to go short on the Nasdaq, and the reason why I had this horizontal line here is because this is when I put the tweet out. I made this tweet when I was at the airport. I was already short the market from I think like 9 or 10 that day, but as you can see, the market was just pretty much choppy. It was just going sideways most of the day, and I was like, man, I have this short on. I didn't take any other trades that week, and I mean, it was a ton of volatility in forex. I really wish I would have traded a lot more forex this week, but I was enjoying time the last little week I had with my girlfriend in Toronto. I love you, baby. And I really just wanted to focus in on a trade that I had really high conviction in. So I didn't really take that many trades. I waited for the short, and I said maybe Thursday or Friday. I made the tweet at 2, but I just kept it saved because the last, I would say like month or so, we've seen a lot of volatility the last hour or 30 minutes of the market. So I kind of waited to the end of the day. But as you can see, I posted that at 3:53, and 3:53 was like right around here. And then once the market closed at 4, now that doesn't mean that the market is actually closed because this is futures contracts. So those don't close. Man, I can't even think when they close right now. I got so much on my mind. But when those close somewhere over here somewhere. 1700. 1700 is 5. So yeah, so I had the short over here. And we'll just make it look like that. Something like that. And then I think I got it like an 8-1 on this or something. So it'd have been like something like that. So anyways, I had the shorts on. Then I also took another short because it came back into the area that I felt confident in. So 2 shorts on this. The entries, stops, and targets aren't exact. I'm just trying to give you guys a quick visual example of the trade I placed. So I had the shorts on the Nasdaq, and I had to keep these overnight. So I did have to pay, not pay, but I did have to have extra margin in my account for overnight margin. And as you can see, at once 4 hit, the market just tanked, and it tanked some more. And I had some other shorts over here as well the following day, which was Thursday. So this was Wednesday, Thursday, then Friday. I also had some shorts, but then we had this huge rally. Thankfully, I didn't get caught up in this move here. That would have it wouldn't have destroyed me because I had a decent amount of profits from these shorts I had the past few days. But anyways, the conviction came from the Fed deciding to hike interest rates. So I have a short bias for a majority. Mainly, I have a short bias. So I had the fundamentals on my side with this trade. And the hardest thing was just having the patience. I started listening to reminiscence of a stock operator. So let's look at that. Reminiscence. Man, I put in the wrong thing. Reminiscence. Man, y'all are gonna make fun of me, but I don't know how to spell, so I'm gonna just put in reminiscence of a stock operator. There we go. So I restarted listening to this book, and as a couple of you guys may know about Jesse Livermore, is that he made a ton of money and then he went broke. He made a ton of money, then went broke. But one of the things that he said in the book that kind of stood out to me was patience and finding that one trade and just stalking the market until that perfect trade comes up. And sometimes I kind of get in a bad habit of just placing a ton of trades because I know, the law of large numbers. Like I know after I place a certain amount of trades that I'll be profitable. The thing that sucks with that is I'm placing a lot of trades and I'm not being super cautious with my time. Oh, let me bring it here. So I'm not being super cautious with my time. So it's like I'm sitting at the computer, I'm placing a lot of trades, and I'm getting a decent amount of risk to reward trades that are in my favor. But I'm sitting at the computer all day, and mentally I become more and more drained. So I start to kind of like shut off, if that makes any sense, because I'm just so tired from just trading and just sitting at the computer and staring at charts and placing trades and calculating my risk and all that type of stuff. And then reading reports and listening to macro and all that stuff. It's not the best way to have a social life if I'm just super focused on my trades like that. So I was like, look, I have the last week with my girlfriend. So let me focus on just taking the highest probability trade that I can, because I'm going to spend some time with her. We're going to be driving around. And then also I'm going to be on a flight, and then I'm going to be jet lagged for a few days. So let me just take the highest probability trade I can and just form my bias and stick to that. And if I don't trade this week, I just don't trade this week. Thanks Goldstein, Steve Goldstein. So, so I decided to kind of just focus in on my high conviction trade, which was shorting the Nasdaq. I found the level to go with my fundamental analysis, which was right here, which was the supply zone, or you can say resistance. We'll make this into a resistance. Former support, becomes resistance. Bada boom, bada bing, if you know what that is. And I formulated my zone to go short at. Then I wanted to see that we had some momentum and some sellers that also agreed with my bias on the market to go short. So here we go. I had these 2 shorts. I had like maybe 3 or 4 shorts on Thursday. And then Friday, I think I only had maybe 1 or 2 trades to the downside on Friday. I think I had like here, I had a trade like here and this trade here. And then by Friday, I was pretty much just done. I got stopped out in profit on this trade here. I got stopped out like somewhere in this area. I think this wick got me, but it was somewhere in here that I got stopped out in profit at. And I was just done for the week. So, you know, long story short, form a bias in the direction you think the market is going to go. Find a technical level on where you think price should go to, and you should start to see sellers come into the market. Then, using multiple time frame analysis, go to a smaller time frame to see that there's some momentum going in that direction. That way you can lower your overall risk. Because if I took this level straight up, I wasn't gonna have as decent a risk to reward ratio on this trade, because my stops are gonna have to be somewhere around here. And then I would have been able to get a 3-to-1, but I wouldn't have been able to get that 8-to-1. So anyways, I can talk about this stuff all day. So that's the video for today. I'm going to do another video on maybe do another commentary video. I love doing reaction videos and commentary on trading, because that's pretty much all I do all day is just watch trading and finance and economic stuff. So anyways, that's the video for today, guys. If you have any questions, comment them below, or you can hit me up on my social media. Please like, comment, and subscribe to this YouTube channel, and I'll provide you guys with more content. Oh, also, please turn on the notification bells, because otherwise you might not see the next video. So anyways, peace. I'll see you guys later.
Man, even Jesus had a shooter, and God be having unbelievers that didn't mess up their demeanor. And yes, they know it's hard, they know, cause when they be up in those trenches, man, they show, but what they do